Good afternoon, everyone. This is Henry, and in tonight's free video, I wanted to give you a broad point of view from some of the patterns that I believe are the most ominous in the current market, and part of what has made them maybe a tiny bit deceptive in the current situation. Now, I know that Apple hasn't had a stock split for some time, so it may not be as directly meaningful as what I'm going to show you in Amazon, but I think it's a helpful way of thinking for traders that look at this and say, Apple at 138, there's no way Apple's going to go on to be $100 stock. That just, it's just not possible. Remember that it has very little to do with the last price traded and so much more so to do with the market cap. Let's take this over to Amazon for just a minute to use more of this conversation, because, how many traders were looking at Amazon and saying, oh, it's cheap at 100. Well, then it gets down here to, at 95 and then into 90. And then what I feel, is exhibited on these bigger picture patterns, where if something drastically doesn't change this outlook, there's a very real chance that Amazon is going to be headed down into $69, $70. Right? These are some of your external retracements of the previous advance. And it's in an effort to use, just look at the squeeze that came here previously. And I'll give you that there was some pretty, bullish days inside this squeeze. But what you're looking for is when the squeeze finally, runs its course and actually fires, what was the bigger directional move to be had? Well, it was a very bearish break. So if you can see that move, and then you can see the squeeze that has been forming here on the daily chart, I just think there's a fair chance that this decline that you saw from up here around 122, if it were to mimic itself, right? Swing low, projected, look how similar that is. Again, it's just showing that this decline, if it were to have similar personalities or qualities to what may follow in the next 2 to 3 months, that's very easily a $70 stock. And those that are sitting there in denial about the price of it don't really acknowledge the market cap. Right now, Amazon is still $1 trillion, just shy of market cap. When you think about it from share price, it's just easy. It's like the market plays a psychological trick on you, because it used to be $2,000, $2,200 stock. Isn't it just so cheap here at 90? Well, that really has nothing to do with the situation as much as it has to do with the market cap and how so many of these names are just being marked down. And then I think about that again, going back to Apple, where you say, oh, at 136, does that seem cheap? Well, it's still a $2 trillion market cap. So it could give back a good portion of this and still be one of the biggest company out there. And I think that's just something we have to remember as we evaluate patterns that very much appear to want to be breaking. Don't be thinking that the price itself is cheap when that market cap could be listed so much lower. So I hope that's helpful and provides some important patterns going forward. You guys have a great rest of your evening, and I'll see you in the next free video. Hey traders, this is Henry with simplertrading.com. I wanted to thank you for watching today's video. I hope you found it helpful, and if so, be sure to click the like and subscribe buttons down below. If you would like to also see me putting these ideas into action and trading my own account live in front of you, be sure to sign up at simplertrading.com. And I hope to see you in the chat room sometime soon.